Assalamu alaikum. Welcome to question number 2 of AFM pre-June 2024 mock exam. Question number 1 I have solved, which is a question on accusation and merger. I've uploaded on my YouTube channel. Please do go and check. That was my last video. Now this is question number 2. And my next video will be focusing on question number 3. So in question number 2, this is a question on APV, adjusted present value. 25 marks question where we are going to have professional skill. Okay. So now, as you can see from here, you have been given company information and new product investment. Let us first see the requirement. Okay. So 13 marks you need to calculate APV, and not only that, you need to evaluate whether the investment should be accepted or not based on your APV. A for 13 marks. Coming to B is for 7 marks. Okay. You need to discuss the factor which will influence the company's credit ratings. Evaluate the extent to which this will be important to its shareholder. So not only the factor which will influence credit rating, but also how it will be important to shareholder. Okay, and it's for 7 marks. The professional skills that you will be tested will be analysis and evaluation, and skepticism and commercial acumen. Okay. So while answering, I will show you how to get the professional skill marks. Now, so company information, let us read number 1. So since I have to calculate APV, wherever I can see I have number, I will read that first. Okay, so basically first exhibit is nothing but it's about the company. Okay, that it manufactures electronic parts, and it was listed on stock exchange. Then they were content with their profit increase in the last 2 years, but now they want to pursue in new products because they want to increase their customer base and profit more quickly. So now they are considering how to finance that future investment. Okay, so they are thinking that they should take advantage of their listed status and issue loan notes. Okay, so basically not much from here, but exhibit 2 is the one which we need for our requirements. Okay, here you have the number. So you have been given the expected inflation rate 8%, 7% and 5%, and you have been given the immediate expenditure 160. Okay, this is for the new investment. Also the working capital will be 20 million immediately. This will be recovered. Okay, it will increase annually at the start of year 2 to 4 by the falling rate of inflation. So working capital will increase by this inflation 8%, 7% and 5%. Then we have working capital is fully recoverable at the end of year 4. Now we have the post-tax cash inflow. So for this is a 4-year investment, for 4-year project, they have given the cash flow for 4 years. So basically we have to discount first. So you have been given the post-tax cash flows and realizable value is 0. Then how the project is financed, they have given it in a package. So equity issue is 60 million, bank loan is 50 million, subsidized loan is 70 million. Together that 180, you can see here the working capital 20. That 180 is made up like this: 60, 50 and 70. That's how it's going to be financed. Okay, and this bank loan, it is payable at 8%. This is the company's current cost of borrowing. And for subsidized loan, it's below the risk-free rate. Risk-free rate is 3.2%, and you have to reduce it by 50 basis point. Okay, interest rate payable at the rate of 50 basis point below the risk-free rate 3.2%. That will be the interest for subsidized loan, and then issue cost will be 2%. This will be payable on the equity issue and on the subsidized loan. So you will have to take 60 and 70, 130. 50 you don't have to take for issue cost. And tax is 20%. Tax is payable in the same year as the profit. Okay. And discount rate, she has calculated all equity financed. Imagine assuming there's no debt, all equity finance, discount rate is 12%. Okay. So they want to calculate APV. See, one question in your AFM will be on either net present value or APV. But even if it's APV, you have to ultimately calculate net present value. Whether it's net present value or APV, under both you should be able to calculate net present value. This is the whole point. So first we'll calculate. And if you have seen one thing, question 2 and 3 in AFM, which is for 25 marks, are easier than question number 1. Why? Because in question number 2 and 3, we don't have ethics and marks is less, yes, definitely. And also, the question is very specific towards one particular part of the syllabus. For example, question 3 is on exchange rate. Okay. Question 2 is on APV. So we know one particular thing, one calculation maybe and a discussion. One discussion question. But question number 1, which is for 50 marks, there are a lot of things there. Ethics is there and other things also. Calculation, like discussion questions are more there. Okay, so that's why always start your paper with question number 1. Okay, so quickly using it, I will open the spreadsheet. Okay, and I'll keep my requirement to open like this so that I can quickly see the figure. You can always resize. Okay, resize like this. So now first quickly I will do calculate APV. Okay, you need 5 years. You have to start from year 0 because there are some investment which has been done immediately. Immediately means year 0. So I will be having 1 year. You need to label. Okay, this is year 0, 0, 1, 2, 3, 4. Okay, then here start with the inflows, the post-tax cash flows. Okay, so I'll make this little bigger so that it looks more presentable. These are all in millions. Okay, so as you can see here, all this I will copy. Okay, so here I will write from year 1, 32.4. I will drop the millions, 52.7, 66.9 and 56.4. Nothing in year 0. Then after this we take the investment. Investment year 0. How much? 160. Just write minus 160. Done. Then we have working capital WC. How much? Minus 20. It will be near 0 only because they have told immediately. But it will increase by inflation every year. Now see how I will do the inflation part. So inflation you can see 8%, 7% and 5%. So you will increase this 20 working capital by 8%. Okay. What you need to do is put equal sign here. Put this and just multiply by not 1.08, 8%. 0.08 or 8%. Enter. Done. Then when you go here, equal to, what do you do? Put a bracket. You need to add this to now. Remember at the end, whatever you have incurred, you will recover at the end of year 4. You will add this to. Now your working capital increased. Okay. And on this you will apply the inflation. What is the inflation for second year? Third year 7%. See, this year 2 inflation you have to put for year 1. Okay, year 3 inflation will come in year 2. Year 4 will go to it will go 1 year previous because it started with year 0. Because fourth year what happens? We are going to recover everything. You understanding? So this will take 7%. Multiply by 7%. Enter. Will not put this maybe bracket. Okay, it's not working the function. Okay, just put a plus sign. Okay, plus this sign. Enter. What happened? It will not perform the function. You have to put bracket. That's why bracket is a must. Enter. You see? Make this also in 1 decimal place. make everything in one consistent manner, because this is in one decimal place. So make this also in one decimal place. In my lecture one, I have taught you how to do it. Don't worry, again I will show you. Go to custom, and in all, go here and click the 0. It will show, sorry, it's not 0. uh, Go here and format, go to one decimal place. Okay, no, there has been a mistake. Bracket, bracket, enter. So this, I'll go here, custom, there is another way to round this. Either you can do it manually, just take the one out, or there is a formula to this. It is round. Let's say you want to round this to 2-digit number. So you will click this and you will put comma 2, enter. I'm sorry, comma 1, because it's one decimal place. It will be 2, but it will be one decimal. You see? So just copy paste here. When you're pasting it, paste it with formula. Okay. Wait a minute. I think I've gone wrong somewhere. Okay. Equal to round. This number. Comma 2. No, it will not perform in one go. Okay, I will not. Okay, equal to this plus this. Multiply by 7%, enter. Okay, so we are going to do it manually since we don't have the formula. Minus 1 point. Okay, number. So since I'm not, okay, so what did I do? I just went there, format cell, and I clicked this 0.0 because you want to show this in one decimal place. So what I went there and clicked 0.0 because I want to show this only up to one decimal place. Okay, the moment I clicked, it automatically selected this one for me. Okay, so this is the one you have to select, and it will show in one decimal place. All this little tips and tricks you have to know, even if I've taken a little time of yours, but it's a good thing, no? You have somehow discovered the way to find it into one decimal place. Otherwise, it's very easy to say, I'm not getting it, ma'am. No, you should know how to round this to one decimal place. Now this one. So when you go here, this plus this plus this. Put it in bracket. If you don't want to go do it in one go, you can create a separate table here and show how you are getting that working capital, and on that apply the inflation rate. So when I go here for 4 years, it's 5%. That means in the third year, it's 5%. Enter. What happened? Now I need to round this. So now I'll go to format cell and click here and OK. Done. You see? Now when I go here, it is just the sum function. I will just do the sum function of all this. All this are in one sign, so you can add. Done. But you see there's a minus sign. So how do you make the minus to positive? It has to be positive. You have to release it. Okay, it can't be minus 24 here. How do you make it positive? It's very simple. Just put a minus after that. Enter. Just put a equal to and minus and then do the sum function. It will just change. You can do it in any way. Either you can multiply it by -1 or any way so that you make it a positive figure. Okay. Or you can just add without leaving the sign, just add 20, 1.6, 1.5, 1.2 and you will get this number. Whatever the way you adopt, it's fine as long as you get this positive number and this figure. Now I will go format cell and down this. Okay, done. Okay, so now I'm going to get the cash flow CF. Do the sum function. Take from here so that I can copy paste in the other cell. Done. You see? Now I'm going to drag it to the other cell. The moment I dragged it, it did not. This are not in one decimal place. So make sure this are in one decimal place. How do you go there? Just format cell and just simply click here and OK, done. You see, this is very fast and very quick, provided you know the way of doing it. Now, discount factor. Which discount factor you have to use? Go here. See, when you are calculating net present value, where you have to calculate APV, keep this in mind. The discount factor you need is all equity financed. So all equity finance discount factor has been given to you. You don't have to use, and you can calculate it also because you don't have any other information to find the discount factor. You don't have equity beta, you don't have asset beta, you don't know the risk premium, you only know risk free rate. So mostly for APV, they give you this discount factor. Okay, 12%. So discount factor is 12%. Write it next to it. Write discount factor like this. You should always write which discount factor you have used. Okay, so when you go to discount factor, there is a way of doing it manually. I don't suggest it. Don't waste your time. Go to formula sheet and AFM formula sheet and go to the discount factor table. Go to 12% and use all this. 0.893, 0.797, 0.712 and 0.636. Okay, you can't copy paste it from here, so write it. Okay, this will be 1 because if I put 1.00, it will show it as 1 only. 0.893, 0.797, 0.712 and 0.636. If you want to show this as 1.000, go here and you need to format cell. If you can't format cell, make this window a little bigger. You should be able to see the last function as well. So go here and do another 0. Okay, you see, this is very easy. Now, present value, PV. Present value is nothing but just this multiplied by this. Enter. And I will drag it to the other cell. You see, these numbers are very big. Please don't deal with these big numbers. Keep it in one decimal place or two decimal place, whatever you want. It's up to you. Okay, I will keep it in one decimal place. Why? How do I know that I keep this in one decimal place? It's very simple. Just see your question, okay? See in how many decimal places you have been given the cash flows in. You can see all these are in one decimal place. You see 66.9, 56.4. So keep everything in one decimal place. It should be uniform. Then it's easier to deal with this four. So go to format cell and it's one decimal place. It's okay. The moment you click here, okay, done. Now it looks better, right? More easier to work with. Now the answer that is known as, it is known as base case net present value. You can write NPV for net present value and APV for adjusted present value. Short forms are allowed. Even for discount factor, you can use DF. Discounted cash flow, DCF. It's acceptable. Now, it is just the sum function of all the present value. So just take all. Make sure your outflows are in minus and inflows are without minus. Signs has to be taken properly care of. Why? Because when you perform the sum function, if everything is in positive, the things which has to be deducted are added, the things which has to be added are deducted. That should not be done, okay? Now you see, it's negative. It's negative. I will keep this in one decimal place. So format cell, already it's clicked, done. Okay. So you see. So now they also told you, please go back to the requirement, calculate APV. APV we haven't calculated yet. It is just base case net present value. But based on this also you can say, you should always state whether you should accept the project in this stage or not. Mostly, all your question in AFM, you must see one pattern, you must have seen it. Base case net present value are always negative. Okay, so it is based on your APV. If that is also negative, you don't accept. If that's positive, you accept the project. Okay, so till now you don't accept the project. So you have to write base case present value is this one. Project should be rejected. This is the decision. Okay, you should write the whole proper full sentence. Okay, you can write it in word processor like this, because you are writing a full sentence. Don't write sentences in Excel. Always go to word, refer it. This is question number 2A. You can just write A. Okay, so then you can write base case net present value, or refer the number. You can say refer Excel or anything like that, but it's okay. Since you have labeled there in Excel also, it's fine. It's approximately like this. You have to write it with currency, okay? Dollar 13 points, don't write 13.6, write million. 13.6 million. Okay, the moment you put bracket, it's understood it's a negative, or you can write negative. So base case net present value is approximately this one, and on this basis all calculations are need to be performed in spreadsheet, sentence, discussion questions in word processor. Okay, and on this basis the investment should be rejected. Even for writing this you will get marks. Now next is what? Financing side effect. Okay, label, make it bold so that you know this is the finance part and this is base case net present value. Okay, now here you have a little bit of more work to do, because this is what examiner is testing from you. What are the things you need? You need issue cost. When you are writing a number in one column, make sure all the numbers are in that column, so it's easier. And description, if you're writing, for example, mostly column A is for descriptions. Like this, I'm writing issue cost, so keep it for columns only. Don't put what do I say, description here and then number here, you see, and then again description here, and some, no, don't do that. You are going to lose out your professional marks. Okay, so first issue cost. Issue cost is the easiest to deal with. Always deal that with first. Okay, finish it off. You need a working. Wherever you need working, you have to refer it as working 1, 2, 3, 4. So for issue cost we need a working, so I will label it as W1, working 1. Okay, if you have more than one working, label the working number 1, 2, 3, 4 like that. If you just have one working, just writing W is enough. So issue cost working 1. I will not write the figures. I'll keep it for separate working. What's next? Decide on this first. What are the things you need to calculate? I need tax shield. You are going to get a tax shield because you are paying lower interest on subsidized. So tax shield on subsidized loan. Next, what's next? Tax shield on bank loan. Because it's a debt, you are going to get tax advantage for that. Tax shield on bank loan. Because we are paying a lower interest for subsidized loan, there's a subsidy benefit. One is tax benefit, one is just subsidy benefit of lower interest. Two benefits are there. All this require working, okay, by the way. W2. You can do the working in any order. It's up to you. But usually issue costs are dealt first because that's the easiest to do. Others are lengthier, especially subsidized loan. So only these four benefits are there, and then it's the APV. So this is the total benefit of financing. Okay, we'll keep all the numbers here because even my base case was in this column. Okay, then finally I'll be having my APV, adjusted present value. So now I will keep space and now I will start my workings. Always keep workings down below. Don't do your workings across because it doesn't look nice. It does not look presentable. It's harder to understand, sometimes usually examiner when they mark, they don't scroll like this. They scroll downwards like this. It's more better. If you see your answers also, it's like that only. Workings are below. But it's your choice. Issue cost. Label your workings always clearly like this. So first working, see, you must be having multiple workings, 5 3 working, 3 5 workings. You can't just write working and put everything under one working. No, label 1 2 3 4 like that. So this is specifically for issue cost only. Working number 1. They told issue cost is based on what? Clearly they have told. It's on equity and subsidized loan. So this 60 and 70, 130. Okay? And it's 2%. This is how you work on the cost. Okay? 130 multiply by 2 because 2% and divide by 98 because already you have deducted that it is netted off. Okay? You want to find that issue cost. Okay? So it's see, if because this was 2%, so you will write 2 divide by 98. You deduct from 100 that 2% issue cost. If this was 5% issue cost, then it will be multiplied by 5 divided by 95. This is always fixed. Okay, this is how it works. Enter. Make everything in one decimal place. Okay. Okay. You need to see this format cell in one decimal. Okay. You see, this is an issue cost. It has to be. It's an outflow. Just put a minus here. Minus 130. Enter. Done. Now, this you can copy. Copy here. Paste. When you paste, it will not paste it because it has a formula in it. So it's your wish, you want to copy with the formula or just the value. I will just click the value. Okay, done. If you click the value again, you have to format. Done. Tax shield on subsidized loan. Okay. Now, working number 2. See this issue cost, I will bold it. Tax shield on subsidized loan, that's why I'm writing sub loan. So here, what are you going to do? See, this is a loan. Loan is for 4 years, okay? Which discount factor are we going to use? And interest we are paying. See, we are getting the tax shield on that loan on interest, okay? What is the interest percentage? Here, you have to assume. You can use two rate. What is it? You can use the borrowing rate, normal borrowing rate 8%, or you can use the risk-free rate 3.2% for subsidized loan. Okay, this is the government interest rate, and this is the current borrowing rate 8%. You can use any of it, but you have to state the assumption which rate you have used. If you've calculated using 8%, that is correct. If you have calculated using 3.2%, that is also correct. So it's your choice. But let me tell you, but in your answer they have used 8%. Normally they use normal borrowing rate. Normally in any question, that's what I've seen. So let's use 8%, okay? Assuming we have used 8% as a borrowing rate, we'll go with it. We need to find the present value of an annuity. Why annuity? Because every 4 year, same 8% we are paying the interest. So we have to go to the annuity factor table, and at 8%, this one, we have to find for year 4. It's 3.312. Okay, this is what we want. For interest rate annuity, if the same amount every year, we have to use the annuity factor. Then, and what is the subsidized loan amount? It is 70. So now let's quickly do that. How much will be the interest? 70 multiply by, see that annuity factor you have used using the borrowing rate 8%. Okay, for that annuity factor I'm saying you can use 3.2% also. But then if you use 3.2%, let me tell you, you have to use the normal table. You have to use this factor, this work calculation. Why? Because there is nowhere you can say 3.2 discount factor is given. That's why it is easier and wiser to use the whole percentage, like 8% over 3.2% is easier to use because you can just get it from the table. If you choose 3.2, you have to use this formula is already given here. 1 minus 1 plus r to the power minus and divided by r. Using this you can find out. Here r is what? 3.2. N is 4 years. Using that you can find out. Okay. It would be somewhere between this two. 2.829 and 2.775. Somewhere between those two only. Anyway, coming back to this. So it is 70 into, but remember the interest rate at which you are paying the subsidized loan is 3.2% only. It will be 3.2 minus 50 basis point. Why? Because they told the interest for subsidized loan is 50 basis point below the risk-free rate. So risk-free rate is 3.2%. So 3.2 minus 50. That means minus 0.5. 50 basis point means 0.5 only. 50 divided by 100. So here it's 3.2. So if you deduct 50 basis point, that means 0.5. 3.2 minus 0.5 is how much? You can always use a calculator here. If you know the answer, it's good, but I will show you how to use the calculator still. 3.2 minus 0.5. 2.7. So it's 2.7%. This will be your interest at which you are paying the interest rate at which you are paying the loan. Okay, 2.7% on the 70. Multiply by, remember the tax is 20%, so deduct tax, I mean 20% of tax on that annuity factor. Just now we have taken at 8% for 4 years, 3.312. I'm repeating again once more so that you don't get confused. Let me tell you, see here that 3.312, okay, annuity factor. What I've done is I've taken 8%. For annuity factor, we can do like that. But when we took the interest rate here, we took 2.7. This has to be 2.7% only. Here you can't use 8% normal borrowing rate because this is a subsidized loan on which you are paying the interest. Only for the annuity factor to calculate this, there is an exception. We can use either the normal borrowing rate or the subsidized loan rate. Not the subsidized, not the 2.7%, but 3.2. The risk-free rate I'm talking about for finding the annuity factor. Okay. Now this I will round to 1 decimal place. Done. 1.3. This is a tax shield on subsidized loan. It's a inflow. So paste special, I will just click the values. Done. Okay. Paste special value. Okay. Next time I'll click it with the formula. I think we'll see how it works. Okay. Next, tax shield on bank loan. Here you have to do a little bit working. Not subsidized loan but bank loan. This is working 3. How much? Here you have to do a table working. Why? Let me take you to the exhibit 2. So for bank loan, if you see, read what's written here. Repayable in equal annual installments. That means for 4 years annually you will be paid in equal installments. Interest is calculated on the balance outstanding at the start of the year. Okay, you need that table for 4 years with the interest and the repayment amount. So let's quickly do that. So first it's the year. Okay, 1. You don't need 0. Opening balance OB. What is the opening balance? It is 50 million. This is the opening balance. Towards the end of the year 4, it will be wiped out. Okay, it will be 0 because you will be paying the installments also with the interest. 50. And on this you have to pay the interest. Interest at what rate? 8%. So equal to 8% multiply on this amount. Enter. Now the repayment. Repayment you have to work out. You have to do a small formula for repayment, and repayment is equal for all. How you do the repayment? See, for repayment, because the installment is equal, what is it? 50. Amount of the loan is 50 million. Okay, for how many years? 4 years. Which rate are you using? 8%. Here you have to use the 8%. Okay, annuity factor 8% only. Only for the subsidized loan, that option is there, either 8% or 3.2% for the annuity factor. But when you came to the bank loan, it is 8% only. Okay, 8%. At 8% only you have to find the annuity factor for 4 years. So we have already got it. 8% 4 years, 3.312. So that would be the annuity factor. Got the annuity factor? So annual repayment is this, equal to, see, this is a repayment. That's why I'm putting a minus figure. Okay, minus 50. Divide by the annuity factor. 3.312. This is a fixed method. This method is fixed. Any repayment you have to find out, this is the method. Always the amount of the loan divided by the annuity factor. Okay, enter. First I will round it up to 1 decimal place, 15.1. You see, so this I will take for, I'll copy paste it to the other cell also, like this. Repayment is fixed. Now I'm going to get the closing balance CB. So how? Just do the sum function. Enter. You see, 38.9. The moment I get this, automatically it becomes the opening balance for the next year. and keep this interest cost somewhere, because on this interest you are going to pay tax. That's what we are basically, we are working this to find the interest. See, we already found for year one. Why are we doing this table? We want the interest for the 4 years with the repayment. If it was just the interest, automatically we would have got 8% on 50. But since after the repayment we are repaying also, that's why we need this interest. This interest will keep changing. That's why we are working this table. Now you got, I hope now you understood the reason behind this table. So first year we need second, third and fourth year. This separately I will keep a note of this. Okay. So again, interest cost. It's 4. Okay. Next. We'll keep this also in one decimal place. Looks better. Okay. Now this copy, paste here. When I paste, I will paste it with formula. Okay. Okay. You see? The moment I click here, you can see the function. But if I would have just clicked copy the value, you see, if I click just the value like here, I can only see the number. I can't see the function. But it doesn't matter whether you calculate the value of the formula, the result is the same. Now, how do I get the interest? Just copy paste it here. Automatically, they will take 8% of this value. You can always click back and check. Double click and see whether the function that has been performed is correct or not. So it's 3.1. Again, you got, so just write here 3.1. Now, I'll just drag it here. Automatically, some function will be done. This again, I will copy here. Sorry. I will just write 26.9. 26.9. Then again, I will copy paste this. It will automatically take 8%. So 2.2. Now I'll just drag it to the other cell. Now 14. Okay. So 14.0. If I take this, it will take, wait, undo. It will take 8% of this 1.1. So I've got the interest. Wait. I've got the interest that I wanted. Now, drag it. You see, this should always work out like this. It should always be 0 because you are paying the amount with the repayment and the interest. This is what I wanted. On this, now you are going to pay tax. Tax relief at 20%. Tax relief at 20%. So equal to 0.2 multiply by this amount. Enter. I'll just copy paste it. This I will make it to one decimal place. Format cell and OK. So what happened? I've got, right? I've got the tax relief. On this tax relief, this is what we wanted. This you have to what? You have to write the discount factor. What percent? 8%, because 8% is the normal borrowing rate loan. Discount factor 8%. Okay. 0.926 using the table. 0.857. 0.794. 0.735. So just multiply this with the discount factor, enter, copy it. This is the present value. I'm sorry. I'm going to round this to one decimal place. Okay. Now, net present value. Some function. Done. This format set OK. You see, 1.8 is the net present value. If you see the answer, they are getting 1.6 because they got this as 0.1. Anyway, maybe they have rounded up like this. Okay, so that doesn't matter. Now, what's next? So it's 1.6. This is the benefit. 1.8. Okay. It's 1.8 here. And subsidy benefit. The last working. Subsidy benefit. Put. Subsidy benefit you can do in one go, equal to what is the amount of the subsidy? 70 is the loan. Multiply this with what? See, because of subsidy you are paying a lower interest. The difference of the interest. Normal interest rate was 8%. You are paying at what? 2.7%. So 2.7%. Multiply this with 80% after tax, after deducting tax. Tax is 20%. And annuity factor. 8% for 4 years, 3.312. Okay. Form is set. Okay. So 9.8. This is the subsidy benefit. Now I'll put 9.8 here. Now the sum function. 10.2. So now you can calculate your adjusted present value. Okay. This plus this, your base case net present value plus your total benefit of financing. Again, you can see this is negative. It's minus 3.4. So what is your reaction to it now? Tell me. It is still negative. It is still negative. Now calculation part is over. We are going to discuss. Okay. So discussion. Because they told and evaluate whether the investment should be accepted or not. We are still in part A. So go here. Discussion. Okay. Never mind the spelling. So now tell me, how are you going to discuss this? You have already wrote base case net present value is negative, that's why you're not accepting. Now coming to the financing part. So we are going to say APV, or you can say that financing in this way would add 10.2 to the value of the project. Okay. Financing the project this way would add how much? 10.2. Okay, would add 10.2 million dollar, write it full, to the value of the project. Okay. Now we'll discuss about APV. Okay. APV is minus 3.4. So because this is negative, I'm not writing full sentences that you can do. I'm just writing what needs to be discussed. You need to write that this is negative, therefore the project will be rejected. That is number one. Next, what? You need to discuss. Discuss means both the side you have to talk. On one hand side you are talking, APV could be rejected because is this. But if you see the amount, minus 3.4, the amount is, see, whenever the amount is small, small means 3, minus 1, minus 2, you could talk about that value is very small. Okay, you can talk about sensitivity analysis. I will write it in bullet points what you can talk about. I'm not writing full sentences. Okay, so you can talk about negative value is relatively small. So when the value is small, you could talk about you can do the same calculation using alternative assumptions. Okay, you can do alternative calculation using alternative assumption, because maybe the negative might become positive since the value is small. First point is this calculation using alternative assumptions. You can talk. Then what's you can give examples how you could do, like what. See, it is not very clear why the time period is 4 years, right? So one example is time uh, limit of project. You can talk about this was 4 years in this, so why are we terminating after 4 years? We don't have any idea. Maybe we can extend the time of the project beyond 4 years. That you can talk about and see the situation whether this becomes positive later on or not. Next, third point. What's next? Discount rate. You can talk about discount rate. We don't know why we have used the 8%. There's no basis for it. Talk about discount rate. Documents, you can say that there is no basis for the discount rate. Next. See, when you are discussing, you have to show your professional skills, okay? That you are not accepting the project based on just the value. You are evaluating it from various angles, non-financial factor also. Then your skepticism, you are challenging the opinion of their accuracy, of their assumption. That's you are showing the skepticism skill by questioning their discount rate, how they got discount rate, why are they terminating the project after 4 years. This is you are showing skepticism skill. Okay. Then, so the finance director's calculation. He must have calculated and given you some post-tax cash flow. That also needs to be checked. So calculation needs to be reviewed and verified for accuracy. You can always talk about accuracy of the information given to you, data. This you can always talk. And if you have used a certain model, you can talk about limitation of that model also in the discussion. Okay. Because if you change the discount rate, so you can always give possibilities by saying even if you change the discount factor by small amount, let's say it becomes 7 or 6, the scenario changes. APV might become positive. Okay. Maybe when we were forecasting cash flows, we used more optimistic assumptions. Okay. So you can always talk about this more optimistic assumptions about cash flow. You can discuss all this. Next. See, next you should always link this to the case study. We haven't linked anything with exhibit 1. Now open your exhibit 1 and link. Okay. Here they told that they want to go into the new product and they want to increase their customer base. And if you see, profits have steadily increased since it was incorporated. And they have always kept their operating cost under control. So something about this you can talk in the second para. Okay. For example, you can say that this investment you need to consider in the light of the demand of the investor, whether they want to develop profitable product or not. For example, if you see APV is slightly negative, right? But if you move into the new product, it might become positive, or it might give you more opportunity to develop new products and hence increase your profits. So you can mostly talk about your profits and new product development. Okay. Next, part B. So A is over. Now we are moving on to part B about factor for credit ratings. You can give 3 to 4 factor. Okay. So I'm not going to write anything, but I'm going to show you the factor. Okay. Before that, let me take you to the marking scheme. If you see here, question number A, it was 13 marks, no? How did we get the 13 marks? See, now 2 markings for working capital. Working capital is always 2 to 3 marks. Okay, because we have a working there. Initial investment and all does not have a working. Okay, because it is just copy paste from the question. But working capital, you have to adjust it for inflation. That's why 2 marks. Net present value is 1 mark. Correct net present value. Issue cost, another 1 mark. Tax benefit of subsidized loan, 1 mark. Tax shield benefit for the bank loan, because we had to use that table for 4 years, is 4 marks. Subsidy benefit, 1 mark. APV, 1 mark. So all this 4 came into the 4 separate workings. And working capital we put when calculating net present value. Those 2 were done when calculating base case net present value. And 1 for APV and 2 to 3 for discussion. So talk about 2 to 3 points. If you don't know how to allocate marks for discussion, first always allocate and finish it off for calculation. Usually keep 1 mark where workings are not required, where you might need working. You can keep 2 marks, and where is over more than 1 year, let's say for 4 years, like this is 4 marks. So once you allocate like this, usually you see 1 mark for each. Wherever working, 2 marks, and wherever more than 1 year, let's say for 4 years or 3 years, based on the number of years they have given the marks. After you have calculated all this, you see from 13, okay, just add 3, 4, 5, 9, 10, 11 marks has been allocated from 13. That means 2 marks will be there for discussion. 2 to 3 marks. Let's say 2 for discussion. Okay. So based on that, you can talk about the points. Maybe you can give 2 points out of the whole lot of discussion, right? What are those 2 discussion? One, you can say base case is negative, that's why rejected. Another, you can say APB is also negative, you are rejecting. But on the other hand, you can check it for variable assumptions. You can check the discount factor. You can check the accuracy. All this you can talk in discussion. These are very simple. It comes for any question. Discussion part will be there with APV or net present value. And things that you discuss are more or less the same always. Talk about discount factor. Talk about the accuracy of the information. Talk about the based on the case study. If it's a subsidized loan, then duration of the project. All this you can talk. These are basic, common for any question. Coming to part B, they talk about credit factor. Okay, so they are giving up to 2 marks. So your credibility will be based on your profitability. One, you can talk about profitability. The other one, you can talk about gearing. The other one is management and political and industry. Any 2 you can choose and talk. It's up to 7 marks. Okay. And how professional skill marks is there that you can read, but let me tell you very briefly. I will just very briefly go through it. I will not read one by one, but mostly your evaluation and analysis skill is through your calculation. How well are you using your calculation to support your argument? And if you are using your information from wide range of information, for example, as I told you, you can talk about profitability. Okay, that even if it is negative, by moving into new product, you can increase your profitability. So that is, you are using the exhibit 1, that is showing your analysis and evaluation skill. Like that you can get it. The more range of information you use and calculation you do, this will give you analysis and evaluation skill. Okay. Second, skepticism skill. Skepticism is, you are challenging. For example, you are challenging how they got the discount factor. You are challenging the financial reporters forecast information of cash flow. You are challenging them. You are saying, how do you know to check accuracy? That is skepticism skill. Okay. You are challenging their assumptions by saying alternative assumptions also could be done. Then commercial acumen. How are you showing? See, only one skill is not tested in question 2 and 3, that is communication. Okay, that is tested in question 1 when you were doing the report format. That's why here we don't have to do any format. You can write your answer in any format you want. Okay, but I don't mean in bullet points. It has to be proper sentence with different paragraphs and headings. Commercial acumen. This is how practical your answers are. Are you linking to the case study? Are you giving solutions which are practical? Okay, if you're telling them some recommendation, is it practical? That is commercial acumen. So later on you can go back and read, and I will just show you the sample answer here for part B because it's discussion. Let me quickly take you to question. You see how nicely it is presented. They are writing all these years like this, starting with 0. Whenever investment is there, start with 0, because working capital and initial investment are mostly immediately in year 0. Then they are showing this, that they are doing in dollar million. You see, then they are writing. This is for writing narratives, then calculation. Wherever this minus is in bracket, it's clearly labeled. Then they are writing base case. Wherever APV is there, write base case. Don't just write net present value. And then they are writing this sentence. This has to be written in word processor. Okay. Then after that, they are writing financing side effect. Issue cost working 1, tax working 2, this one working 3, this one working 4. Adding together this one. Then they are adding base case 13.6 and 10 and getting this answer. Done. And below that comes the working. Never put your working in the main table. This is what I wanted to show you. So clearly they are labeling issue cost, tax, shell, and here they're tailing also. Note to markers. Okay, you can use 3.2 instead of 8 for annuity factor. Here also they're using the tax shield on bank loan 4 years. And then they went to discussion. This has to be there. This has to be there. This is what I'm talking about. Okay, here they are talking about all assumptions. They can change assumption. It is negative, they should reject based on APV, but on based on other factor, if you look on other assumptions, it might become positive. You're talking about possibility. Here you're talking about profitability. By moving on to new product, you might increase your profit, things like that. Now we are moving to part B. So part B, all the factors, write it in separate subheadings. Okay, the length of your answer varies. Okay, your answer will always be smaller than this. You can't write this full-fledged answer like this. It's not even advisable also, but I will show you what points you have to write. Okay, first is profitability is 1 point, financing 2, operational gearing 3, management 4, political fear 5, industry 6. Okay, so these are the factors. We'll go through one by one very briefly before I end of this video. So profitability, tell me how it will be important for shareholders and credit rating agencies, how it will affect. See, the more profitable you are, it shows what? It shows you have a sustainable earning. The more sustainable you are, the more credit rating will be better for you. It will improve. Okay, they will also take your different sources of earning. The more different sources of earnings you have, the more stable you are, and how reliable those earnings are from the sources. They will take all this, and your profitability will be based on your expansion of customer base also. The more customer you have, the more profitable you will be. This is good for you. Like for shareholders also, it's important. Even they want it. Okay, they will be interested in your recent profit performance. Even the investors, even the shareholders will be interested on this because they will be interested in longer term investment, right? Next, financing. This will affect shareholder, this will affect credit rating also, but it will affect in different ways. Tell me how. See, for the creditors, okay, they will be concerned whether you'll be able to pay them their principal amount with the interest. For shareholders, it is about, of course, yes, even they want the debt commitments to be done, but Their concern is variability of earnings because it will affect their earnings per share and also their dividend. They are concerned about this too. Okay. Next. So it's about that. The way they will be influenced is different, but both will be affected by financing gearing. In terms of credit rating, okay, this credit rating will be more influenced than the shareholders' opinion. When we are talking about financing, it affects credit rating more than the shareholders also, the way it is financed. It has a greater impact on credit rating. Why? Because they want to. See, the credit rating agencies, they will look at the companies. Always mention the name of the company. Don't write general answer, okay? They will look at their long-term plan to attract finance. They will see whether their gearing is under control. Are they breaching any covenant, loan covenant? They will see all this. Whereas shareholder will not see into all those things. Okay? For example, okay, see, for example, you can always use example. It's good. You are going to get your professional skill marks. The more example you give, don't try to give more than one, two examples, okay? One or two is enough. Wherever you can find more example, at least one is enough. You might not be able to find example for every topic, every subtopic. Never mind. Wherever you think you are able to find an example and it's relevant, write it. For example, here I'm finding an example for financing, but I might not be able to find for operational gearing or management. Then don't write. It's okay. So here, if you see, for this, it's a new product investment. No, for that you need more loans. So in a way, it's good. Okay, it's a positive sign because they are taking more bank finance to obtain new product investment. But because of this, credit rating will affect. How? You have to check the debt covenant. If you are already breaching, going over your debt covenant, taking, continuing to take more and more and more loan, ultimately your credit rating will suffer. Coming to operational gearing. Okay, because they have told that they are keeping their operating costs under control in exhibit 1, right? So it's important for credit rating and shareholders. Because if they keep their cost low means their gearing, operational gearing will be low. And because their operational gearing is low, company can take a greater flexibility. They will be more flexible in terms of changing circumstances. If circumstances changes, for example, they are moving on to new product, it will be better for them. Easily they can change because their gearing is low. With big gearing, it's difficult. You're locked in a situation. Okay, management. Now what's about management? You don't have to write all this factor, okay? One is for 2 marks. So let's say you can write 3 points, maybe any three, but I will explain you all the points. We are left with three more: management, political, and industry factor. See, credit agencies, they will also look at the experience of the company's management also, whether they are complying with the corporate. See, because the more experience they have, automatic they will comply with corporate governance. They will keep their clean accounts. It was important for them. For example, they will see whether managers are able to control their working capital or not. If they are not able to calculate, it will affect their credit ratings. No, ultimately they will suffer. And it is important to shareholders also. Liquidity is important to shareholders also. Every company, your profit might be low, but it's your cash flow that matters, and cash flow comes from working capital management, proper working capital management. Political factor. Credit rating comes from your political stability of that country, how transparent your transactions are, and there are sometimes country specific threat also. Okay, for example, remittance control might be there. Okay, but here this is your commercial acumen skill. See, this sentence gives you commercial acumen skill. How? This sentence, I'm highlighting it for you. This last sentence. How? You're showing that you have a good knowledge of the market. How? I will show you. Let's go back and I will take you to exhibit 1. Here they have told that they are investing locally. Okay, they were listed on the local stock exchange 2 years ago. Okay, here they are saying that same thing, they are repeating. Shareholders may consider this political factor. They might consider this. But the fact that they're investing in the local stock market suggests that they're not put off by them. Because they're in the local stock market, political factor will not harm them so much. Whereas if they were investing internationally, then political factor of those countries also matters to them. Then it would matter. You see, this is a good analysis skill also. The last factor, industry factor. What about industry factor? Even your industry environment affects the credit rating and affect the shareholders' opinion also. Okay. So all this thing they will see what is the position of the industry within the economy, how cyclical the industry is, and the economic forces affecting it. So now we are talking about specifically link this to the case study. They are into electronics, right? Which industry are they in? Electronics. So how investing in the electronic industry fits in the terms of diversification and guaranteed earnings. Okay. So credit rating will affect by what the company is doing to maintain its position in the industry, particularly development of products up to date technology. What are they doing? They want to develop products with up to date technology. Is it going with their position in the industry? If they maintain, if they invest in up to date technology, is it helping them to maintain their position in the industry? So all these things, these are industry factor. This affects credit ratings and shareholders opinion. So that's it for this video, and I shall see you in the next video. That will be about question number 3. So question number 3 is your interesting question. I know most of you like this question 3. It is your risk management. This question is about interest rate risk. Looking at this only I can figure it out. It's interest rate risk, not exchange rate risk. Okay, so I will shall see you in question number 3 in my third video, and you can click below and get to my video number 1 and watch question number 1 if I have missed out, and do watch this video, and do not forget to subscribe to my channel if you haven't subscribed yet, and please do share this content, my channel, with your friends and make everyone benefit from this free course before the exam comes. And best of luck for your upcoming exam. Take care and God bless you.